So, hi friends, very good evening all of you. Let us continue with the ratio analysis. We have started in our previous session. I have started ratio analysis. I have given you a detailed introduction about ratio analysis, and we have discussed about various formulae. After that, we started with problems, and I think up to problem number 8 we have done. So, Dharini, can you tell me up to which problem we have done now?
Sir, I completed the chapter, sir, so I don't know.
Excellent. You have completed the full chapter? Hello.
Yes.
Very good. Excellent.
I think two sums is balance. Others I completed.
Very good. Excellent. So guys, what about others? Remaining people in the chat box, can you please tell me what is the completion status? There are many other students. Please let me know. Have you completed, or shall we discuss the remaining problems? Abraham, Dana, Sandeep, Vrinda, all the others. Till 8 we have completed. That's all. So whatever we have done in the class, that's all. Super. So chalo, we'll start. Vrinda, read problem number 9.
Yes, sir.
Great.
Complete the following annual financial statements on the basis of ratios given below. Profit and loss account for the year 30th June 2015. To cost of goods sold 6 lakh. To operating expenses nil. To EB. Okay, fill in the blanks. Okay. By sales 20 lakhs. To debenture interest 10,000.
EBIT is there here.
To EBIT dash. To income tax dash. To net profit dash. By EBIT brought down. Balance sheet as on 30th June 2015. Share capital dash. Reserves and surplus dash. 10% debentures dash. Sundry creditors 60,000. Fixed assets dash. Cash 15,000. Stock dash. Sundry debtors dash.
Okay, continue.
Net profit to sales 5%. Return on net worth 20%. Current ratio 1:5. Sorry, 1.5:1. Inventory turnover 15 times. Share capital to reserves 4:1. Rate of income tax 50%.
Super. So shall we start with this problem? First, what you need to do, as it is, copy P&L balance sheet in your notes. That will be main answer. After that, we'll start working notes. Okay. So put the heading problem number 9. Problem number 9. First write down profit and loss. Okay. In that write down to cost of goods sold 6 lakhs. So you can put particulars rupees. Rupees. Then to cost of goods sold 6 lakhs. Then to operating expenses to EBIT. Okay, this is total. This is total. And here they have given by sales 20 lakhs, I guess. Is it right? Yeah. Here by EBIT, brought forward they have given to debenture interest. To income tax. Net profit. That's all. This is our P&L. Is it right? Now we'll prepare balance sheet. Balance sheet. This side liabilities, this side assets. Balance sheet, what is the pro forma they have given? Fixed assets, cash, stock, debtors. Fixed assets, cash, stock, debtors. Debenture interest, they have given 10,000. So fixed assets, cash, stock, debtors. On the liability side, what they have given? Share capital, reserves and surplus. %10 debentures and creditors. So this is the balance sheet. So what you have done, just you have copied the pro formas. This is balance sheet. The above one is P&L. Okay. So Dharini, looking at this two lines, this is one line. This is one line. Can you tell me what will be debentures amount? All of you, can you please tell me what is debentures amount in the chat box? Tell me. You know that the debenture interest rate is 10%.
Yes, sir.
You know that interest paid is 10,000. So what will be the value of debenture capital?
So debenture capital is 1 lakh, sir.
Excellent.
1 lakh into
How?
10%, you will get 10,000.
1 lakh. So this will be our working note one. Working note one. Debentures is equal to interest divided by interest rate. That is equal to 10,000 divided by 10%. 1 lakh. Step one, all of you understand?
Sir, in balance sheet, they gave creditors 60,000 and cash 15,000 in question.
Oh, that also they have given. Very good. This
Yes,
is 60,000. This is 15,000. Very good.
Yes, sir.
Correct. Okay. So shall we go to the problem and solve step by step? Step one is over. Now, net profit to sales is 5%. Net profit to sales is equal to 5%. Already sales is given. Therefore, net profit is equal to 20 lakhs into 5%. How much more?
1 lakh, sir.
So I'll put 1 lakh here. Are you following me?
Yes, sir.
So net profit 1 lakh. So I have put 1 lakh here. Then next working notes 3. Income tax rate is equal to 50%. Okay, all of you observe carefully. This is PBT. This is less tax. This is PAT. PAT we call it net profit also. Now guys, you tell me, if this is 50% of profit, what must this be? If tax is 50%, PAT also will be 50%. No. So in many problems we have seen, if tax rate is 50%, tax and PAT will be same amount.
Yes,
Do you understand this, all of you? Guys, do
Yes,
you understand this, all of you? Please tell me. I need response from the remaining people. They have given tax rate 50%. That means it is 50% of PBT, isn't it? That means PAT will be another 50%. So from this, can I say, therefore, tax is equal to PAT? Tax is equal to PAT. Now we know that PAT is 1 lakh. So can I say tax is 1 lakh? Now add the debits, 2,10,000. Bring it here, 2,10,000. So EBIT balancing figure 2,10,000. So do you understand this part, all of you? Till this clear? Very good. Now current ratio 1.5. Okay. Current ratio 1.5. Fourth working notes. Current ratio is equal to current assets by current liabilities is equal to 1.5. Okay, so Dharini, can you tell me, do we have any current liability in the question?
Yes, sir. We have sundry creditors.
60,000. So can I say current asset by 60,000 is equal to 1.5?
Yes, sir.
Therefore, can I say current assets is equal to 60,000 into 1.5, 90,000?
Yes, sir.
So all of you understand this, guys? So total current assets is 90,000. This is working note 4. Working note 5. Inventory turnover 15 times. Tell me, ma, what is inventory turnover rate? Formula bolo.
Cost of goods sold divided by average stock of
Excellent. Cost of goods sold divided by stock is equal to 15.
stock. Yes, sir.
Correct? Now, cost of goods
Yes,
sold is
sir.
given in the question. Cost of goods sold is already given in the question, 6 lakhs.
Yes, sir. They gave 6 lakhs.
So, can I say here 6 lakhs by stock is equal to 15?
Yes, sir. 6 lakhs.
So, tell me what is stock. Therefore, stock is equal to
40,000.
Are you sure?
Yes, sir.
Stock is equal to 40,000. So, can I put it in balance sheet?
Yes, sir.
40,000. Now, sixth working note 6. We know that current assets is equal to D plus S plus C.
Yes, sir.
Okay. Current assets we know 90,000 is equal to debtors we don't know, but stock and cash we know.
40,000 plus 15,000.
So can you tell me therefore debtors is equal to how much?
35,000.
35,000. So can I put debtors 35,000 here?
Yes, sir.
Okay. Then return on net worth 20%. Next working note 7. Working note 7. Return on net worth. This is also known as return on equity. Return on equity is equal to how much they have given? 10%. No, 20.
Yes, sir.
Not 10. 20%. So guys, tell me what is the formula? Return on equity or return on net worth formula bolo?
PAT by net worth into 100.
Very good. PAT by net worth is equal to 0.2. PAT by net worth is equal to 0.2. Or you can write PAT by net worth into 100 is equal to 20. So if you write into 100 this side, write full number 20 there. If you do not write into 100, you can put 0.2. Mathematically, they are same. So we know PAT.
1 lakh.
Excellent. PAT and net profit are same. 1 lakh divided by net worth is equal to 0.2. Guys, can you tell me what is net worth? 1 lakh divided by 0.2. Is it 5 lakhs?
5 lakhs. Yes, sir.
Then they said capital to reserves 4:1. 8th working note. Capital reserve ratio. Capital to reserves 4:1. So can I say capital is equal to net worth into 4/5? Reserves is equal to net worth into 1/5. Is it so? Capital reserves 4:1. So total net worth is 4 plus 1, 5. So capital will be 4/5 of net worth. Reserves will be 1/5 of net worth. Now you calculate and tell me total net worth 5. Distribute this in 4:1 ratio. Hello, madam.
Yes, sir.
Is this right?
Yes, sir.
So can I write 4 lakhs capital here? Can I write 1 lakh
Yes, sir.
reserves here? So tell me total of balance sheet how much?
6,60,000. Yes, sir.
Okay, so put the same amount here. Then fixed assets will be balancing figure. Fixed assets will be balancing figure. So guys, this is your beautiful balance sheet. Do you understand this, all of you? Ta-dan, ta-dan, ta-dan. Once the balance sheet is over, go to P&L part. So EBIT 2,10,000 we know. So can I put EBIT 2,10,000 here? So this is 20 lakhs. This is 20 lakhs. Operating expenses is balancing figure. Problem is over. This is your P&L. Guys, everybody please confirm whether you understand this problem. This is a problem given in previous examination. In one of the previous examinations, they have asked this for 6 marks. Working notes you need to write very clearly. Guys, can we go to next problem? Brinda, you understand this problem? Huh?
Yes, sir.
Shall we go to next question?
Yes, sir.
Read question number 10. No, wait. Question number 10 we'll do later. 11 and 12 I'll give homework. So read question number 11. Ma?
From the following information of X engineering company, work out the performer balance sheet if its sales are 16 lakhs.
So sales 16 lakhs is given. This is the basis of your answer. Okay. This will be the starting point. Okay. Next, continue.
Sales to net worth 2.3 times.
Wait. So from this ratio and sales 16 lakhs, can we calculate net worth?
Yes, sir.
Guys, sales is given. Sales to net worth ratio is given. Tell me, can we calculate net worth? Yes. If we can calculate net worth, the next ratio is current liability to net worth. Already we know net worth in step 1. Can I calculate current liability? Current ratio is given. Already in previous step, I have calculated current liability. So can I calculate current asset? Already I calculated net worth. Now total liability to net worth. Can I calculate total liability? Already sales is given. Sales to closing inventory 4.5. Can we calculate inventory? Average collection period 64 days. Sales is given 16 lakhs. So debtors is equal to 16 lakhs into 64 by 365. Over. So they're asking you to put all the numbers in this pro forma balance sheet. Can you do this question, Vrinda madam? Can you do this question as homework?
Yes, sir.
Then why you have not done previously? I asked it in the last class, right? Read
Sir,
question
I
number.
did.
You did not have time, huh?
No, sir. I did problem number
7. Huh?
6 homework.
Okay. Read 12.
From the following ratios and further information given below, prepare a trading and profit and loss and balance sheet of Mr. Green. Fixed assets by capital 5/4, capital by liabilities half, gross profit ratio 25%, closing stock 50,000, fixed assets to total current assets 5/7, fixed assets 5 lakh, net profit by capital 1.5, stock turnover ratio 10 times, net profit to sales 20%. Out of the current assets, sundry debtors are 6 lakh rupees. The balance represents cash and closing stock.
That's all. So what will be the basis? Fixed assets 5 lakhs is given. Correct? Huh? So fixed assets to capital 5/4. So we'll calculate capital here. Based on capital, we'll calculate liabilities. Based on capital, we calculate net profit. Based on net profit, we calculate sales. Based on sales, we calculate gross profit ratio. Stock turnover ratio is given. Then debtors is given here. Fixed assets to total current assets is given. You need to prepare only trading P&L and balance sheet. So put one star mark here. Many students might miss this. Stock turnover ratio is given, right? What is stock turnover ratio? 10 times. Now, fixed assets 5 lakhs. Guys, can you tell me what will be capital? I want answer from you. Fixed assets 5 lakhs. Fixed assets by capital 5 by 4. What will be capital? 4 lakhs. Correct. Correct. Net profit by capital 1.5. Can you tell me net profit? Net profit by capital 1.5. Can you tell me net profit? I want response from all of you. Excellent. Correct. 6 lakhs. Net profit 6 lakhs. Net profit to sales ratio 20%. Net profit 6 lakhs. Can you tell me sales? $30 lakhs. Correct. Gross profit ratio 25%. Sales 30 lakhs. Can you tell me cost of goods sold? Can you tell me cost of goods sold? Hello. Cost of goods sold. Correct. 22.5 lakhs. Correct. Stock turnover ratio 10 times. Cost of goods sold 22.5 lakhs. Can you tell me average inventory how much? Stock turnover ratio is equal to cost of goods sold by average inventory. Cost of goods sold 22,50,000. Stock turnover ratio 10 times. So average inventory will be 2,25,000. Correct. 2,25,000. So that will be average inventory. Closing stock 50,000 given. Can you calculate opening stock? Average stock 2,25,000. Closing stock 50,000. So what is opening stock? Opening stock plus 50,000 divided by 2 is equal to average stock. So now you have to calculate opening stock. Opening stock is 4 lakhs. Many students, what they do, one common mistake, what they do is here they write sales. Okay. Here they write sales XXX. And they know gross profit. Here to gross profit, they write XXX. So here they write to cost of goods sold. But in the problem, when they have given either opening or closing, since you have an opportunity to calculate opening closing using average, which is possible through stock turnover ratio, you need to write all these things to opening stock. To opening stock, you need to write. Purchases, you need to write. Closing stock, you need to write. Otherwise, if you chumma put sales this side and cost of goods sold, gross profit that side, you will not get marks. So in this problem, because stock turnover ratio is given, because closing stock is given, you have to calculate opening stock also. That's all. Then nothing else is there. In the balance sheet, balance represents cash and closing stock. Okay, closing stock is already, 50,000. So the balancing figure will be cash. So you understand this question number 12. Guys, you understand question number 12. Okay, will you be able to do it later? We'll do 2-3 other models also before we wrap up today. Okay, very good. Can we go to next question? Okay, question number 13. Sandeep, read question number 13.
Prepare working capital requirement from following information.
Wait, what is working capital formula?
Current asset minus current liabilities.
Very good. So we need to basically calculate current assets, then current liabilities, subtract current liabilities from current assets. That will be working capital. Correct?
Yes, sir.
Yes. Continue.
Average collection period 60 days. Average payment period 75 days. Inventory holding period 90 days. Calculated with respect to cost of goods sold. Sales 20 lakh. Gross profit 25%.
Okay.
Cash and bank balance 2.5%. Credit purchases 1/3 of cost of goods sold. The company expects 50% sales increment during the next year. Assume 1 year consists of 360 days.
Okay. So what is current year sales? 20 lakhs. Next year, they're expecting 50% increase in sales. So guys, can you tell me what will be estimated sales for next year? Hello. Estimated sales for next year. Can I say 30 lakhs? Or if I say 30 lakhs, will you get a heart attack? No. Very good. Everybody is saying 30 lakhs. Correct. Correct. Now, gross profit 2.5. Sorry, 25 or 2.5? 25% gross profit. Less profit 25%. So guys, tell me 25% on this, how much? Hello. Is this right? Cost of goods sold. All of you, please confirm. Are we correct arithmetically? Okay. If the meeting abruptly closes, don't worry. We'll join back, and from there, where we left, from there we'll start. Okay. So average collection period 60 days. Now tell me. Serial number, ratio, formula, calculation, answer. Serial number 1. First ratio, they are saying average collection period 60 days. You tell me the formula. I want to calculate debtors. How debtors can be calculated? Can I say debtors is equal to sales into average collection period divided by 360? Do you understand this? They have given average collection period. I want to calculate debtors. So can I say debtors is equal to sales into average collection period divided by 360? Sandeep, sales how much, ma?
30 lakhs.
Average collection period?
60 days.
60 by 360. Tell me.
50,000.
50,000 or 5 lakhs?
5 lakhs.
Next, they have given average payment period 75. But before that, they said inventory holding period 90. Inventory holding period given. So what ratio we calculate? Can I say stock is equal to cost of goods sold into inventory holding period divided by 360? Same formula I am putting in a easier way. So see, this is actually average collection period formula. This is actually inventory holding period formula. But because we need to calculate stock, we are rewriting formula. So I have written stock is equal to, maybe when you studied formula, you might have studied inventory holding period is equal to cost of goods sold divided by average inventory into something you might have written. Average stock by cost of goods sold into 360 you might have written. Okay, now tell me calculation. COGS how much, ma'am? 22,50,000.
22,50,000.
Inventory holding period how much?
90 days.
Divided by 360. Tell me how much it is.
$5,62,500.
5,62,500. Correct. 3. What is the next ratio given? First, we'll calculate credit purchases. They said credit purchases are 1/3 of cost of goods sold. Credit purchases is equal to cost of goods sold into 1/3. So tell me cost of goods sold how much? 22,50,000 into 1/3. Can you tell me how much it will be? Will it be 7,50,000?
Yes, sir.
Okay. Next, 4. Average payment period they have given. So can I say creditors is equal to credit purchases into average payment period divided by 360? Credit purchase 7,50,000 into what is average payment period? 75.
Yes, sir.
Sandeep, tell me the answer.
So 1,56,250.
Okay, then 5 cash. They said cash is equal to 2.5%. In the question, they said cash is equal to 2. But student will get mental in the exam. Sir, cash and the bank 2.5%. They have given 2.5% on what? They have not mentioned anything. Can I take 2.5% on current assets? No. If I take 2.5% on current assets, it will become loop. No. Cash changes, current assets will change. Current asset changes, cash will change. So this cannot be taken on current assets. So what is the only other option? Guys, tell me. I cannot take it on current assets. So take it on sales. That's all. On sales. Okay, so 30 lakhs into 2.5%. Is it 75,000? Okay, now calculation of working capital. Particulars. Amount rupees. So here we write current assets. Under this, debtors, stock, cash, total current assets. Under that we write current liabilities. Creditors. Working capital. So Sandeep, tell me debtors how much, ma'am?
That's 5 lakh.
Inventory.
5,62,500.
Cash.
75,000.
Total current assets.
11,37,500.
Creditors how much?
7,50,000.
Hey.
Sorry. 1,56,250. Yeah.
That is credit purchases.
Yeah, yes, sir.
Creditors is 156,250. So can you calculate working capital, guys? Guys, what is working capital? Correct. 9,81,250. That's all. So any doubts in this? Any doubts so far?
Sir, how can we, sir, that sales, whether to take that 20 lakhs or that 30 lakhs, how can we?
Chiller question you are asking. Financial management is always for the next period. You are estimating working capital for the next period. Why do I need to calculate working capital for the month already over? Why do I need to prepare budget for previous period? Budgeting or forecasting always for the next period. Correct?
Okay, sir.
So whenever you are preparing budget, whenever you are preparing working capital forecast, it should be for the next year. So today, what is the date today?
22nd March.
22nd March
2022.
2022. So today, if you are preparing budget, you will prepare for April 2022 if it is monthly budget, or 22-23 financial year you will prepare.
Okay, sir.
That is the reason we call it projections, forecast, estimation, budget. Always take future period.
Okay, sir.
Okay. Any other doubts, guys?